welcome to a very timely discussion and a very interesting, I would say, discussion around how financial infrastructure and payment gateways are streamlining MSME lending in India. Today, I'm joined by two very esteemed fintech leaders. We have Mr. Rohit Taneja, who is the founder and CEO of Decentro, which is a fintech infrastructure platform in itself and boasts of a portfolio of companies that have lenders that essentially enable the MSME sector. And then we also have Mr. Shrikant Patil, who's the managing director and CEO of DigiAlly, which essentially works on unlocking financing opportunities for the MSME sector. So, before we jump into the discussion, gentlemen, let's start with introductions. What do you guys do? What does your organization do? So, Rohit, we'll start with you, and Shrikant, you can join right.
Yeah, absolutely, sure. Well, thanks for that, Apurva. Yeah, so I think as you rightly covered, we are a fintech enabler, right? So in simple terms and in layman terms, we essentially act like an operating system, for fintech. So people can essentially build whatever they want on top of this fintech infrastructure. And from a more tech perspective or tech analogy perspective, we are more like AWS for fintech, right? So we essentially enable various kinds of modules that companies can use and take that as foundation to build their own business on top of it, just like you can build any cloud business on top of AWS, right? Various examples are KYC, payments, collections, etc. Right? Those are a few of the key modules that we saw. And yeah, it's been little over 4.5 years. We'll complete 5 years very soon, and yeah, it's been a very interesting journey. Looking forward to this webinar. Thank you.
Very excited to be here, and as I mentioned, always a pleasure to share stage with Rohit. Last time we were in IIT Mumbai, so DigiAlly is a result of a lot of things. The company which now does trust score, which are an AI enabled, AI powered, which is a combination of machine learning as well as Gen AI. I started my journey with consulting companies, BCG, Accenture, Oliver Wyman, and then realized that there is a challenge which is primarily the small medium enterprises which are facing, which is about access to finance. And one of the reasons why there was a failure to enable access from bank and financial institution side was lack of trust. And if we realize that internet has been created where the trust layer is missing, and our idea was to expand trust through alternative data, going significantly beyond financial information. Very glad that we are working with some of the unicorns and taking this message of deep tech and AI across Southeast Asia, across the globe.
Actually, I'll double down exactly on that, gentlemen. So essentially, we will address the elephant in the room, the gap that this sector faces, right? Like for the sector that MSME is, they have such a huge contribution to the GDP that we have here. However, the access to traditional financing is severely lacking over here. The numbers are like abyssal, to say the least. So, as Shrikant, you mentioned that there is a gap and there is that trust factor that is missing in this. Let's also break down this on a simpler terms as to what are the root causes for this gap that is there in the sector. Shrikant, you can start, and Rohit, feel free to join in.
So fundamentally, if you look at it's all about asymmetry of data. Let's say a lender would know everything about a borrower or equal to what the borrower knows about themselves. A lot of these transactions could have been so seamless. And today, if I look at the overall gap globally, it's around $10 trillion of gap, and it's growing significantly, including emerging markets, which is 5.7 trillion, to the markets which are largely, developed market also has huge challenges, right? And then I'm not even going into women SMEs and all of that, right? They probably face much more severe challenges on this. So the fundamental root cause is the trust. That can I trust the organization whom I'm going to deal with, and all the information which they are sharing with me, is it something valuable to me? And one of the main issues is the asymmetry of information, which has resulted into we trying to solve the problem by trying to get more data, right? And Fortunately, the open data has evolved significantly. Decentro has done amazing work in that field, where you are connecting people, connecting organizations, and all that. Along with that, what we need to also see is that how can we build efficiency in decision making? Because by having a lot of information, people would actually get more confused.
Hmm.
So what we have done is we have converted the information into the so what from a trust score perspective. And fundamentally, if you can really trust these organizations, and that's what our trust score reflects. Uh, we are solving for the asymmetry of information by just not giving the information, but also providing the so what of that information.
That is very interesting that you say that, Shrikant. But like, Rohit, from a lender's perspective, right? Like,
Mhm.
what are the root causes of this? Like, why is a lender not comfortable in, like, sort of rolling out a traditional risk assessment model over there?
Sure.
So let's double down from a lender's perspective as well, because we know that in Decentro we have enabled lenders, we
Yeah.
have a portfolio of lenders. So let's also double down on that, Rohit.
Yeah, no, I think Shrikant captured it really well that if you look at the traditional banks and NBFCs, right, and these are the common lenders that anybody thinks of. The Their models in general have been built over years, right? So, for example, if you ask a bank or an NBFC, how long does it take to build a simple underwriting model, and not just build it, like to actually perfect it, and then see the results of it? It's around 12 months. Like that's the average you would see. Now, if in 12 months they are building something, the next 24, 48 months, they will essentially be getting the results of that, right? So they'll basically be reaping the results of that lending model. And then if a new data point comes in between, they most of the times will take a long time to figure out what to do with this data point, right? How does this fit into my existing model? And it's a very extensive and expensive process, right? In terms of rebuilding the model. So nobody wants to go through that. So what ends up happening is they try to retrofit it, or they try to engage alternate data providers in the market, try to get a second model, and then compare that second model with. So there's a lot of basically things that these lenders try. And I think that's where some of these standardized scores, like the one that Shrikant was mentioning, really helps a lot.
Yeah.
Right? The reason why, for example, credit score became so powerful in everywhere in the world is because it's standardized and benchmarked. Right. So both the things, standardization from a table perspective, okay, it's from 0 to 800, whatever, and then benchmarked with everybody, like every lender follows the same benchmark. Right? I think that's the gold, I would say, standard for a score to achieve. And that's, I think, the ambition here. Yeah.
But now that we look at generally this sector, right? Like I remember we were having this conversation and you had mentioned that the sector lacks homogeneity. And that is one of the issues why, sort of, as you said, like if there is a gold standard, if a sector is homogeneous, how do you standardize that, Rohit? Do you want to double down on that?
Yeah, homogeneity in SME lending or any kind of business lending is really hard. Like specifically because SMEs, I think we covered this offline earlier, that how SMEs exist of different kinds. Like you have SMEs which are dealing in manufacturing, you have SMEs dealing in import export, right? Then you have SMEs in software. And these are very, very different kinds of business models. So the kind of risks associated with these kind of business models are very, very different. It's really hard for a lender to be able to underwrite all of them. Right? That's number one. And even like almost impossible to underwrite them with a single standard model. Right? It has to be different models for these things. So I think that homogeneity like will always be a problem. So there will always be lack of homogeneity when it comes to SMEs. We can't expect SMEs to have similar business practices and similar businesses. But what you could do is you could standardize the data points that you can access for these MSMEs. And then these data points could be around, of course, GST, working capital, their bank statements, etc., etc. Right? So you can bucket them. But yeah, I think that homogeneity has to come in from a data perspective. It cannot come in just from a business model perspective.
100%. I think that is very correct. And that's where like a operator like DigiAlly really is helpful, where like the data, you at least have that sort of trust and like a little bit of, as you say, standardization from a data perspective. Now, gentlemen, I'll quickly move to the government side of things, right? Like, because essentially one thing that we hear a lot, it's like an echo chamber when it comes to MSME lending, is the priority sector lending. Like government is actively advocating for increased PSLs for MSME. So, Shrikant, what are your thoughts about it? As in, what do you think? How much of a difference is it making? What should be? What are they doing right? Where is still there a little bit of a gap in this particular sector?
You know, that's a completely recommended approach that MSMEs should be given the priority sector lending, and they should be put on the radar for banks and financial institutions. Today, we look at how things are happening across the world. Across the world, 50% of GDP is coming from MSMEs.
Mm.
67-70% of the workforce is actually employed by MSMEs, right? And again, export constitutes large percentage of MSMEs. So from a government perspective, and we are seeing a lot of things going on across the world today, where uh, while there is globalization, but there is also local economy building, which is critical for us, for every country. So MSME become very important segment for a simple reason. They are amongst the fastest growing sectors, in the country, right? Across any industry. It also means that as the rewards exit, there are risks associated with this. And we have analyzed thousands of companies so far, and I can tell you that one of the reasons why MSMEs are little bit kept at a distance is also because this fluctuation or volatility they face. And a lot of MSMEs face existential crisis very, very quickly from one quarter to another. I mean, one quarter they're really doing well. Their payable days. I mean, I can go into the financials also because we have the benchmarks on financials, as well as few other behavioral traits. So it's a risky segment, and we definitely need priority sector support. One of the things I would also encourage that artificial intelligence should be used significantly while we are pushing for priority sector lending, and that adoption, to my understanding, in India is lacking with banks and financial institutions. If we don't use AI, machine learning, Gen AI in this, it's very simple, like what Henry Ford said, that you are trying to get more faster horses as compared to the automobiles. And faster horses are not going to solve the problem, or excessive credit officers, number of credit officers are not going to solve the problem of close to 1.5 trillion gap within India for MSME lending.
Yeah, that is so true. Actually, that is very right. Like when something is so dynamic, if there is a mandate from the government or there is an advocacy from the government, as you said, it also builds to the trust factor, right? Rohit, while we also talk about this a little bit, also explain to our audience what is priority sector lending. I'm sure a lot of them would not understand why there is a why is there a need at this point of time. Recently, on first, also there has been some updates on the. Let me read this out to you. The home loan sector. So just like generally, also let the viewers understand what priority sector lending is and
Right.
why it's important for government to advocate for MSMEs in this particular segment.
Right. Yeah, priority sector, I mean, as the name implies, right, is basically your people who should be given a priority in terms of your loan cycle. Right? So if you look at it from a cadence of, the queuing of loans that any bank or NBFC has, obviously they get approached by maybe 1,000 people, in that magnitude every day, right, depending on their scale. So, and then of course there are outbounds from their own branch teams, their own, central teams as well, to reach out to specific people for giving out specific kinds of loans, right? This could be home loan, credit card, etc., etc. Um, what priority sector really means is, let's say, out of 100 applications, 15 belong to a sector which, or 15 belong to a kind of audience which will find itself in a huge dilemma of survival, like the existential crisis that Shrikant mentioned, if the loans are not approved, in the next 2 or 3 months. So that is really where that priority word came from, and hence, of course, it became like not just a banking priority, but also a government priority, that you do not want this industry to face these kind of challenges, and not even be able to do basic means in terms of survival. And hence it became a priority mandate for everybody across. Right? So that's really what priority sector lending is, and it's a broad umbrella. It does not limit itself to MSMEs. There are underserved segments. There are like specific audiences in city or 4 tier 5 villages as well, which also get counted here, right? So all that comes under priority sector lending. And then different kinds of lenders are given different kinds of mandates. For example, you will have a small finance bank, which by default is doing a lot of priority sector lending. Right? You will have a cooperative bank, which is doing by default a lot of priority sector lending in their portfolio. But the largest private banks are not really doing so much PSL. They have to be given an allocation. Like the government has to mandate saying, okay, 5% of your allocation this year, for example, has to be, or RBI in this case has to give it that mandate. That 5% you have to do in PSL, right? Or just a random number in that case. Yeah, that's really how it works. Yeah.
Perfect. And I think that clearly ties down to what Shrikant is saying, right? Like there is, when you have a mandated thing that is coming right from up, then there is obviously a sense of advocacy that allows you to build a system which is based on trust, and also the information that reaches out to the public in general, even the people, the lenders, that okay, there is the system is backing this particular thought process, right? Very interesting. Now, from a pillar that MSME lending has in terms of the government push, we've come towards the technology side of things, right? Like, because essentially what we want to discuss today is how technology is going to make the access to this particular the financing for this particular sector more efficient, fast, and also just like, more fundamentally more democratized, essentially, right? So, gentlemen, if you remember, when we started this discussion offline, we wanted to call it embedded finance discussion. However, we with a considerable, deliberation, move towards calling it a financial infrastructure that is going to enable this lending. Rohit, I want you to, shed some light upon it, being a financial infrastructure yourself. Why was that shift? Why do you think embedded finance today will not answer the plethora of challenges that MSME sector faces, and why and lending infrastructure is needed at this point of time?
Right. Yeah, so this is to do with purely the life cycle of like tech and the business. For example, let's say, I'll give you a very parallel analogy. When crypto or blockchain came out, right, almost 10 years ago, like the entire word was out in the market, people were buying crypto, etc. A lot of people were confused with the application, right? A lot of people were confused that, okay, how will blockchain be useful for my industry? What they did not realize, and even now, is that it's still in the infancy infrastructure building stage, right? And of course, now we are seeing a lot of real world applications where consumers are indirectly interfacing with blockchain, and there is a basic level of infrastructure being built out, right? I think that's the key thing that's happening here as well. So you have, in any industry, you have initially an infrastructure stage where you have to build the foundations, make sure data models are right, and then you really get on to, say, embedding that entire tech into an existing application, and hence it becomes embedded finance. Right? So I think that's really, I would say, the high level summary of it. So you essentially have to make sure your data models first are in place. The basic infrastructure for lending is in place, which is what, of course, companies like Decentro and DigiAlly are doing respectively. So I think once that foundation is laid out, then you can start embedding this entire model into, say, a large e-commerce company like Flipkart, for example. Right? And then Flipkart can start offering an embedded SME loan on the fly. Right? I think it's happening at a very rudimentary level right now, but of course, as I said, the foundation has to be really strengthened before you see the true color of it.
Yeah. And Shrikant, what about you? Because you operate at the data level, right? Like, do you think like we were being a little too ambitious going towards the embedded finance side before like we jumped onto the infrastructure side? What are your thoughts on that?
So infrastructure is, financial infrastructure is evolving very fast, right? And we keep listening to Finternet, right? We know that India Stack came into existence. It created waves across the world. Now people are adopting similar models, including the payment infrastructure, identity infrastructure, consent infrastructure. And, I believe that organizations like Decentro and DigiAlly fit in very well into that infrastructure, where you are creating an operating system and we are creating a trust layer into those, right? So overall, we see that what we are doing is complementary to India Stack, digital public infrastructure, Finternet, and all of that, right? So we see as a long-term vision where all of the work which we are doing is going to evolve and strengthen the entire if I can, the highway or these things, right? So that's one. Now, looking at what has also happened over the last few years, and this observation I must share with you because a lot of people ask this question. They say, hey, you do company analysis, but where do you get this data, right?
Hmm.
And if somebody asked me this question 3 4 years ago, when we started building these models and setting up the hypothesis, it was one of the right questions to ask. But today, if I look at, we have done company assessments, not only India, Singapore, but we have done Korea, we have done Hong Kong, we have looked at, Middle East, Southeast Asia, Vietnam, Philippines, North America, we've got a lot of information. So what is happening is the infrastructure which is getting created
Mhm.
is also creating a lot of alternate data. And so far, people have been using only the financial data.
Mhm.
We have the infrastructure which we are creating, or the layer which we are creating, is based on the alternative data. And it's an extraction layer of the data. It's not purely just the data, because there's a knowledge and the wisdom which we embed through the AI modeling. But the whole idea should be that AI becomes an infrastructure layer. I mean, all of us use
Mhm.
AI in, like,
Yeah.
multiple tools, right? You
Mhm.
name it. We got also involved in the latest testing of
Mhm.
Manus, right, which was
Mhm.
launched. DeepSeek was there. So we have been doing, using all the Gen AI tools which are coming in, Google LLM, Notebook LLM, all of that. So I would believe that a layer which needs to be added to accelerate this progress
Mhm.
on digital infrastructure for financial services is the layer of artificial intelligence. And that's where we come in, and the partnership with Decentro helps us make this value proposition significantly stronger.
Correct. And I also think, as you mentioned, right, like apart from the artificial layer, like just to tie down from there, Rohit, what are the other key touch points where, a technology can enable the life cycle of a loan for this particular sector? Because
Hmm.
as you mentioned before, we have lenders that are working in this sector.
Yeah.
So there are we also, and this will also help us tie in where Decentro can also sort of, enable. So what are the other touch points when it
Mhm.
comes to the, the lending journey, if you may?
Right. Yeah, I think the best way to look at a lending journey is probably like an end-to-end digital cycle. And of course, people who have taken loans, who are listening to it would really relate to it really well. So you start with an interest, right? So an interest form, or basically a simple sign-up form, on say a website or application, WhatsApp, etc. Multiple channels nowadays. Um, that is an extremely early pre-filtering process, right? So here, what the lender is trying to do in most cases is using your phone number as a data point, and then taking additional data points out from that phone number, like your PAN, your address linked to that phone number, etc., etc. Um, and then seeing, okay, does it even fall within my purview? For example, if a director of a company is applying, from my underwriting models, am I allowed to underwrite this person? No, or should I pass it on to somebody else, right? Or should I pass it on to a different branch altogether? Then similarly, somebody from Delhi signs up. Am I allowed to service that customer, or should I pass it on to, say, someone in Bangalore, right, for example? So I think that's really the first level, very initial basic pre-filtering, classic black and white rules. Then you go into a deeper data analysis, which is where, of course, players like DigiAlly really come in. They're very powerful. That's like a deep analysis of all the possible data points that you can extract, right? That's really where underwriting happens. So here you have credit score, trust score, GST data, etc., all coming in together. And once that is done, is when you decide, okay, that now everything is sorted. We have a disbursement, aligned. There's an approval in place. This is the amount, for example, 30 lakhs worth of loan is approved. This is the disbursement schedule, etc., etc. Then the payment rails comes in, which is again where Decentro comes in. Through an escrow, the money goes out, and then you have a repayment schedule in place where you essentially either want the money to come in tranches through monthly installments, daily installments, weekly installments, whatever. Right? Again, multiple models will be there. And then finally, hypothetically, if the person or the MSME goes delinquent, right, is when you invoke the collections team, right, and say, okay, we need to get the money back. So here is a digital process or a physical process to get the money. Right? So that's really how the lending journey would look like. Yeah.
Yeah. Actually, I was very, very aptly, summarized, Rohit, because I was going to come to the whole Nikhil Kamath part of it, where I was like, if you were a lender and you wanted to come to a particular, an enabler like us, which is
Right.
Decentro, what do we do? But Shrikant, let's do this. Uh, as you said, right, like you have used AI to unlock financing for MSME sector. So if like I'm a MSME player that wants to reach out to you, can you please break down that for us, like that particular journey, so that it will sort of tie in, like now that the our viewers know the lending journey completely, and we also know where the partnership is coming into play. What about you individually at DigiAlly? How does that look like?
Absolutely. So we are looking at a very simple co-pilot or agentic AI approach, right, for us. Now, if you think about four stages of lending, one is simple lead management, or where you're getting a lot of requests for loan applications. Then the second phase is where you actually making a decision as a bank or a financial institutions to give credit or not. There is a very detailed credit assessment happens, right? And then after that, once the company or MSME has been given a loan, keep monitoring them. You maintain your portfolio, and then there is collections, right? Which is coming in. Now we embed, as Rohit mentioned, that as you support the end-to-end journey, right? And there are many phases onto that. We support the end-to-end journey by having the agentic AI approach, and it's very simple. That simple question like, hey, I've got so many applications, thousands of applications.
Mhm.
Who are the correct fit for me?
Mm.
So that when I do the assessment in the subsequent phases, I'm able to look at only the curated companies, right? Not that I keep looking at hundreds of thousands of companies and waste my bank's bandwidth. The second one is when you look at making the credit decision. Of course, we are not looking at replacing the credit decisioning which is happening in the bank, but they can ask a lot of questions leading to saying, hey, how is this company with reference to the industry, right? How is this, has this company, does it have a potential, right?
Mm.
Because we have created a digital twin of that company. It can tell us the performance behavior of it. So individually, like, we can predict the performance or predict the behavior of a company or individual. We can predict the performance of the company, how they will perform, right?
Mhm.
When we go to the portfolio monitoring, now one of the biggest challenges companies, banks, and financial institutions face is that they don't have same level of infrastructure to monitor how the companies are doing. And I just mentioned a few minutes ago that the companies which are MSMEs can have very big swings in their the performance over quarters. So that monitoring is very important. The decision making on how quickly you can shift your portfolio. You may be in wrong sector, you may have a very high exposure, so you need to know the forward looking view of that. And then collection, the same thing helps. So in this entire journey, what is happening is, if I look at two types of problems we are solving. One type of problem is addressing risk, entire life cycle risk of your association with SME. And it's not only just the financial risk, also operational risk, also market risk. So comprehensive suite of risk where the companies are informed about their association with companies at different stages. That is one part of it. The second dimension is efficiency. We were having this conversation where we do a lot of business case study. So we were having this conversation with chief risk officer of one of the large fintechs, not even banks, which is into MSME lending. They have 20% approval rate, which means that 80% rejections. They spend 7,500, and I'm going to repeat this, 7,500 to reject a company.
Mm.
And let's say they get 10,000 requests. Out of that, 8,000 companies which they are rejecting, multiplied by 7,500, is a burden on the remaining 20% who have come in. So the efficiency has to be fixed. And that's where this partnership is very important, because you get the data, you get access to information very quickly, and you can make these decisions. So addressing risk as well as efficiency are the two problems where we support organizations across the life cycle.
Yeah, actually, that is very interesting because I also realized that while I asked under the pretext of how an MSME sort of can enable their financing options, I realized at the end of the day you are enabling the fintech, like the fintech and generally the lenders, right, across the life cycle with both the solutions. But now, gentlemen, just to wrap this up, how do we do this together? Like, what is this DigiAlly and
Right.
Decentro partnership looking like? What are we doing together so that that is the takeaway that even the audience can take? So, Rohit, you can start, and Shrikant, you can wrap this up.
Sure. Yeah, absolutely. So I think this whole chat started almost around a year ago or something like that, if I'm not wrong. And so we obviously, Decentro has been in the entire operating system game, of fintech since day one. And the data angle really started becoming strong in the last 2 to 3 years. So before that, we were more of a payments company, as like we just started pure play payments, right? And then we realized, okay, this is not really cutting it because payments is just one part of the puzzle. So if you want to really empower BFSI and within that banks, lenders, right, specifically, you need to ideally stitch as many pieces together as possible, right? And then from a banks and lenders perspective, also it becomes really powerful because they're like, okay, in one single platform, I get the entire puzzle solved, right? But then if you do that horizontally, you need very deep partners, right, to do justice to it. And that's where I think DigiAlly really came in very well. So I think when I met Shrikant and I think we started discussing, it became clear that ultimately they are that vertical partner who is focusing very specifically on MSME. And we anyways are that horizontal player which is able to power the SME lenders and the B2C lenders as well. So that's really how it came together. And in very simple layman terms, they essentially become one of the key pieces in terms of data, right, from an underwriting perspective. So any lender, for example, both existing and future lenders for us, they essentially can just come to us and say, okay, I want an entire score and a report combined into one for a very special kind of SME sector or a normal SME, regular MSME sector as well. And we'll be able to provide that. Right? That's really the summary of it. Yeah.
Yeah. What about you, Shrikant?
For us, Decentro is a very important player in the ecosystem of financial services. As Rohit, I really like the word that it's an operating system of financial services, right? Fintech and banks and financial institutions. For us, this partnership means a lot on multiple dimensions, but two important dimensions are, one is we are completely aligned at the mission statement level that enabling this journey for MSMEs from a financial institution perspective, giving more power in their hands so that they can address this $10 trillion and $1.5 trillion in India. That is the kind of work we really want to do together. The second is also, I really like the ambition Rohit and the team carries about expanding in Southeast Asia, right? And we are headquartered in Singapore. We have access to region. We have done work across, as I mentioned, multiple countries. So that also, I believe that there is tremendous scalability play for both the organizations. And we fit in, we are very much in the vertical, small language model, solving a very specific problem, enabling machine learning and Gen AI, where we would continue to develop excellence as we go forward, right? And it's a symbiotic relationship because we will also rely on certain information coming from you over a period of time. At the same time, of course, consent driven. We are public data based models, right? So over a period of time, I also see collaboration where clients come together and say, hey, can you give us private data, and then we can train our models with that. So that I see is a very good symbiotic relationship working together.
Yeah. I think at the end of the day, gentlemen, it's a relationship of trust, as we said, and also enabling the ecosystem in general. What I really liked is that, Rohit, you mentioned, right? Like you start off with one thing when you have a vision in your mind, and then eventually you realize there's so many other things, moving parts that need to be solved. And that is true for everything. Even this conversation, I feel like while we started about MSMEs, we at least now we think we are now at a place where we're talking about how eventually what is the untapped potential that even this partnership has. So that I think would be a perfect closing note to say that I think we will have multiple conversations in future depending upon where we are placed in the partnership journey. So whoever has tuned in, thank you so much. I think you were able to take a little bit away about why there is a gap in the MSME lending sector, what we can do as providers individually and together. And yes, that was the end of this webinar. Thank you so much for tuning in. Thank you so much, Rohit. Thank you so much, Shrikant. It was a pleasure.
Thank you, Bro. Thank you, Shrikant.
Thank you so much. I would like to just add one more call to action here, Apurva and Rohit. So I would also appeal to all the CXOs, including CEOs of lending organizations, to have a conversation with us. And we are not looking at coming in because you are going to replace something, but you can have an engagement where it can be an agentic approach, where it starts with like a co-pilot or a support which you are able to get, and then we can build from there, right? And this partnership is very powerful for enabling that journey. Not only just that we are looking at a platform, but we can have those conversations where we can guide you on how do you embed your strategy based on data, AI, and build that long-term competitive advantage by taking into consideration this partnership.
Yes, decision makers top are always welcome because I think eventually you are going to move the needle. So yes. Yep. Thank you so much, gentlemen. It was a pleasure.